had a flat close on the index after hitting those life highs. The Nifty Bank, though, that managed to surge to a record high, and now we're looking at only higher levels. In fact, if you bring up the intraday graph of the Nifty Bank, while we did peter down a little bit towards the session close, we managed to hold out very, very smartly. Through and through, it was the Nifty Bank which contributed to the market move yesterday. So after hitting that 51,400 print, we ebbed out just that little bit. And guess what? It was a record high when it comes to the FII participation as well. In fact, they were net buyers and they actually bought a little bit more than the DIIs. I don't know after how long that's been happening.
See, the market construct yesterday is easy to understand. Foreign institutional investors are back and they're back with a bang. Now, is it obvious? We told you so. This was waiting to happen, or FOMO by FIs. Whatever construct you want to make in terms of the framework, the bottom line here is that foreign institutional investors are back, and they are back in their favorite sector, which is banks. I just want to establish the liquidity here, and then we'll talk about specifics, which is from 4th of June, which is what is the mood point, at least for the market. What has been the FI liquidity and what has been the DI liquidity. And this is where the real magic has happened. Since 4th of June, if I remember on 4th of June, they were net sellers, but now they've turned net buyers to the tune of about 4,000 crore since 5th of June. Similarly, domestic institutional investors are 18,000 crore, and from 5th of June, they are net buyers to the tune of 21,000 crore. Why am I bringing out this data point? The reason why I'm bringing out this data point is that now the market currently has no large sellers. Retail is active in F&O, DIs, they continue to back the market, and foreign institutional investors, they are also back. So yesterday's market action was obvious. It was waiting to happen. Foreign flows are back. India is outperforming global markets very handsomely, and the flows into emerging markets, which at the beginning of the year were moving into China, I think are really making a comeback. So I think this is just the beginning. I don't think this is like a one-day wonder. With this kind of an convergence and this kind of an comeback by foreign institutional investors who were waiting for an event risk to get over, when they are back, it's going to be a multi-week phenomenon. It's not like a one-day wonder. So what you actually will see is that the mood point and the construct of the market suddenly will shift from small and mid-cap stocks to FI-dominated stocks, because this was the biggest turn everybody was waiting for. FIs कब आएंगे, कहाँ आएंगे, और कितने जोर से आएंगे. So that, I think, is the mood point.
Yeah. Yes, indeed it is, and that's the primary data that we're talking about. I guess FI-dominated stocks are going to be next on the radar, but slow and steady, and that's the way it's going to move. Let's also discuss what happened to the Nifty Bank. Aisha flagged that off because they were on a tear yesterday. In fact, 51,900 was the critical level that you saw the Nifty Bank break out for the first time ever. And in fact, some of the heavyweights, the likes of an ICICI Bank and HDFC Bank, contributed quite significantly to that, close to 700 points. And it clearly seems like some of those stocks that have been, lying low, the likes of an HDFC Bank, are now making comeback, Nikunj.
If you look at the Bank Nifty in last 1 year or last 2 years has actually underperformed the Nifty. Let's establish that. The YTD change for the Bank Nifty followed by the YTD change in the Nifty, and that's where you actually would see a big difference. So the underperformance in the Bank Nifty, courtesy underperformance in HDFC Bank and what's happened to, let's say, other private banks, has been quite stark. But now that really seems to be evening out. And I expect that in the near term, given that yesterday's price action was dominated by good old HDFC Bank, which is like a large cap stock with the highest weightage in the Nifty, highest weightage on the Bank Nifty. It has gone into hibernation, first because of merger and then because of what happened in terms of the post number communication. I think if that is making a comeback, then this outperformance in Bank Nifty, I think, may just be more real, and the outperformance may just be here to stay. Let's look at that data. Is that data coming up? There you go. This is the Nifty Bank this year, and this is after adding yesterday's rally. 6.5% higher for the Bank Nifty, or Nifty Bank if you call it. But the Nifty is up 8%. So this outperformance in Nifty, I think now may just get neutralized because Bank Nifty has a very great scope. Then the next point is that which way would you lean, PSU versus private? And I think time to lean towards PSUs, time to lead away from PSUs and towards private banks, I think is there now. A, private banks are cheap. B, they have not participated. 3, if flows come back, it is highly unlikely that they will come back into PSU banks. While PSU banks in the near term, they may move in line with the market action, but sheer outperformance in the near term because of burst of liquidity, I think would be with private banks. So if you're looking for, let's say, a monsoon trade, summer is over officially, monsoon trade, I think the monsoon trade would be large private banks.
Yeah. And I think, even just going by the pattern in the market yesterday, I mean, not just that the private banks held out, what saw profit taking were the profitable, high PE kind of SMID stocks as well. So I think what you need to do now is you definitely can't be putting fresh allocation into SMIDs.
No, you have to take some chips off the table.
Yeah.
See the rally in, let's say, you look at the defense pack or the railway pack.
They
now,
also profit taking yesterday.
Yeah, and I think it really would be a prudent strategy to take some profits off the table now. If you really bought, let's say after 4th of June, then definitely yes. That means you've really bought it for a trade, and I think the trade has worked beautifully well. See, most of these stocks are up are at a lifetime high and are up anywhere between 10 to 15% from the 3rd June close. For me, 3rd June becomes the benchmark on which market hit a euphoric high. These stocks are 10 to 15% higher even from the 3rd June close. Yeah. That just tells you that while, okay, markets have voted for continuity, markets have voted for, the same regime, that's what the excitement is all about. But the sheer price action which is got triggered because of technical factors and flows, I think just it warrants a profit, it warrants a caution there. So I'm not raising a red flag. All I'm saying is that if you bought these stocks for a trade, I think it will not hurt you, it will not harm you if you take some chips off the table or move into private banks. I think 15% rotation is something which if you want to do, it would be a good strategy, because now in those, see the momentum in some of those mid stocks and some of the PSU stocks and defense and railways, I think is extreme right now. You got to decide whether you want to play for the last 10% or you want to get book profits and then rotate into something else.
If you like this video, then like, share and subscribe to ET Now.